Hey guys, Jeff here, also known as TSX Trader from LiveStreamTrading.com. In part one of this video series, I'm going to show you my absolute favorite long setup. This is the cup and handle pattern on multiple time frames. So it's a multiple time frame breakout pattern and a very profitable pattern if traded properly. This is the number one setup that I like to recommend to our newer traders, and I recommend that they focus on it and identifying and trading this pattern as much as possible and just mastering the art of trading this setup. So let's get right into it, and I'll show you the example today on a stock from our watch list, CRBP. As you can see, the stock was a huge runner today, but this all started from one multiple time frame cup and handle breakout pattern. So let's go ahead and identify that pattern, and I'll show you what we were watching today and how you can identify these patterns on your own. So what is a cup and handle pattern? Well, we call it a cup and handle pattern because it actually looks like a cup and handle. So there's the cup. Okay, this is we'll call this a cup. And this is the handle part that will lead to your breakout. Okay? Now, there's a few things to keep in mind when trading cup and handle patterns. First of all, we want three key factors to get us in on this trade. Number one, we need volume, supporting volume in the stock. It helps if the stock is up on the day, doing a little extra volume. That way more eyes are on the stock and it's more likely to actually break out. Number two, we want the stock to be above VWAP. Guys, if you haven't looked at our moving averages video lesson, you should watch that one first to get an understanding of what these blue, yellow, and white lines indicate. But the blue line in this case is our VWAP, volume weighted average price, and as part of my system I like to have the stock over VWAP and 50 EMA if possible. Okay, so and then the third factor is the entry point. We want the entry to be in an area where we can risk as little as possible to make as much as possible. So the first thing we identify when we notice this pattern today on the stream is the basing action at 780. So if you put a line at 780, you see that there's a nice base in this area. Now let's just go back to the visual of what this cup and handle setup looks like, and I'll show you where the entry should be on this setup. Okay, so here's the cup, and we're not trading in that area at all really. It's once we start to see the higher low and the basing action in here, this is where we're going to get triggered for a long trade setup. There's a few things to keep in mind here, and I'm just going to zoom in a little closer to get a better view of what we're looking at. Now, there's a few things to keep in mind with this setup. One is we're looking to risk as little as possible to make the most reward as possible. This is just standard risk management techniques that we use every day, and this should be a big part of your trading technique and arsenal. Okay, so we're looking at 780 as a nice base on this stock. So we don't know for sure that the stock's going to break out, but where I get my cue is once we see consolidation, and the only thing stopping this from being a perfect setup in my books is it was kind of lacking the volume down here. So I didn't actually get triggered in early on this one. I waited until, you actually wait until you see a little bit of volume come in, and then we know that there's more eyes on it. And what I like to do is grab this higher low right here with a starter position, and sometimes I'll add through the breakout level here. But if I notice some volume coming in early, I like to just sneak in with a few hundred shares just to get myself in, just to get in on the trade. Keep in mind, the risk is very low. The stop in this trade is just below the base at 80, maybe 78, okay? What I like to do is get long on dips, especially if we start to hold higher lows within this pattern. So see how it came back up? This dip right here is an entry point for me on the stock. Let me explain how the risk reward works on a particular trade like this before I get into the multiple time frames. So if I start the trade, for example, in this case I would like to get in on this consolidation, but there's no supporting volume, so I'm not getting triggered in until here. So I'm not really getting triggered in until maybe 90, okay? So in this case, if I start in with 500 shares at 790, my risk is basically off the bottom of this channel at 780. So currently I'm risking $50 on the trade. Now, There are times where I'll make an ad, meaning I'm only getting in with a low risk starter because I'm not sure 100% that it's going to break out, but I want to be in on the trade because I like this setup. I know that this is a high probability trade and I want to be in on it. Now, when I came back over here and put in this higher low, this is typically where I'm going to look to make another ad. Some people like to add on that dip on the higher low. Some like to wait until it's confirming and breaking the prior high. Whichever works best for you, just experiment with both ideas. And maybe in the beginning, don't focus so much on adding any shares. Just focus on the one entry and the low risk, in this case, $50 risk trade, and just let it work for you. It gets a little more complicated when you start adding to positions, a little bit more of an advanced technique, because then your average price is going to be brought up to like a 95 in this case, maybe, or a 96. And then if it dips back down, you might end up kind of panicking, getting stopped out. For myself, though, I do like to start in just a little bit to get started, and then I like to add to my winning position once it really looks like it's going to get going with some volume to confirm it. Okay? Now, in this case, if you are starting with 500 shares at 790, you're risking $50 off 780. Just to keep the math simple, let's say you added another 500 shares at the breakout level here at $8. You now have 1,000 shares at an average price of $7.95. So we're just keeping the math nice and simple here, okay? Here's your average price, $7.95, and you now have 1,000 shares. If you're risking off of 80, you are risking $150 in this case, but with this particular setup, once we see that higher low, I actually move my stop up. I want to see this hold over 90 at this point. It wouldn't necessarily be a hard stop at 89, but let's just say 85. So we're going to risk now $100 on this trade because I made the ad. The beautiful thing about not making the ad is if you just started with the 500 shares and kept it, now you're in a position that you can just break even on the trade basically if it doesn't work. You know, if it comes back to your entry, you can just stop it out for a flat, and there's virtually no risk on the trade. But if I really want to make this trade count, and the reason I'm going to make an ad on this trade, guys, is because it's a multiple time frame breakout trade. And I'm going to show you that in a minute, but first I just want to show you how the risk reward works in a trade like this. If I'm in at 95 average and I'm risking $100 on the trade, watch what happens once we break $8 here. So we have a big move up to $8.25. Essentially a 30-cent move, so a $300 reward based on a $100 mere risk, okay? It's not done there yet, though. Usually the prior area that we break out from, in this case $8, oftentimes that will become support. So it is smart to always lock some shares in, pay yourself on a big move like this. Why not cover half right there and pay yourself $150? Now you really are just going to let this trade work for you. You know, your stop out at this point is going to be under $7.95. There's zero risk, and you have 500 shares left to work for you. Now let's see what happens on this chart as we go along here. So we held the prior breakout level at 8. We actually held that now as support, and we're traveling on up towards 850. Now check this out. We got another breakout level at 850 now. This is another sort of cup and handle type of pattern. See how it put in sort of a top at 850, came back down, and then it just broke out again. So there's a mini cup and handle inside this pattern as well. This stock actually ended up hitting a high of around 960 today. So based on that small, tiny risk, look at the amount of reward that's involved in this. Now look how small this looks compared to what it did before I zoomed the chart out. So even if you locked in your first $150 up here at around 820 or 825, the remaining 500 shares is just free money to let it work for you. And as long as it's in trend, there's no reason to sell it. This trade could easily have turned into over $1,000 winner or more on a mere $100 risk. So that's why we absolutely love this setup. Not only is it a tried, tested, and true setup, if you play it properly, your risk is always low and the reward is very high. So this is your cup and handle setup pattern, one that I want you guys to be able to know, identify, and trade on a regular basis with our group, okay? Now, I'm going to explain to you why this particular setup was so exciting as opposed to just any regular cup and handle setup. And that's because it lines up on multiple time frames. So what does that mean? Well, it means that not only are the day traders watching this on the 1 minute chart, but if you put it on a 5 minute chart, you can also see the same pattern formulate. So now not only are the micro day traders playing it, maybe the slightly longer term traders are playing it, but let's go ahead and put it on an hourly chart and zoom out. This is a breakout level, guys, from all the way back in September. There was a nice peak up there at around 780 in September. And look what happened on the hourly charts. Now we're talking about the macro players, the swing traders, the investors, the guys that are looking at the bigger picture. Their eyes are now on this chart, especially as we kind of had a double top at 780, and then we came back around and put in a big cup and handle right through 780 level, and then we're breaking out again. So, and then if you go on your daily chart, guys, it's the same deal. The investors are looking at this. The longer term traders have 790 on the radar, and now their eyes are on the stock as it breaks through. So now we have, not only day traders, but investors and all different eyes on this particular setup. And this is what helps, give it that explosive momentum and volume behind the move. So guys, here's a great example of a cup and handle pattern. The one setup I really want you guys to know, understand, and learn how to trade. It's a very profitable setup, and it's one that JB and I use on pretty much a daily basis. Here's another example within the same chart on the same day. It put in a peak at 960. That was the high from that big run from way back here at 780. And I'm just going to identify one more time that breakout pattern. Down here, right through $8 with the 780 support. Let me draw it one more time just to help get it ingrained in your memory here. There's the cup, there's the handle, all right? And then this big, massive move. Second spot was here on the, we're on a 1 minute chart, it works on a 5 minute as well, but in the in fact, I'm gonna switch to a 5 minute chart because typically in the mid-afternoon, I'm not watching the 1 minute anymore, so after like 11:30, 12 o'clock, I'm on a 5 minute chart. And this is a very similar setup. We had a nice peak around 960. We had a bit of a base start to form at around 890, and this was identified in our stream as well. Typically in the mid-afternoon, I'm not really looking at like momentum type of plays like this anymore. I'm looking for it to form a range. In this case, between 930 and 890 was the range we identified. And so now we're looking for a breakout through that area. So you can see here another example, and this is just within the same chart, of a cup and handle breakout. We had a bit of a top here at 930 in the mid-afternoon. We found the bottom of the range here at 890. I typically don't trade in this area or in this time of day. So this is right at lunchtime, 12:30, I'm at my desk eating, and I'm looking for the next trade. Notice the higher lows come in right here at around $9. Here's the trigger to get long. Anywhere in this area right here with risk off, basically the bottom of this channel. Sometimes I like to add through, and it's up to you if you want to make an ad or not. It does make it a little more difficult in case it fakes out, for example. But here is another picture-perfect example of a cup and handle breakout pattern again. Now, granted, this one didn't work out as well. I mean, it broke out nicely, and the risk reward was definitely there. If you're long 10.15, you're risking 15 cents. The top of this candle was near 980, so another great trade. But in this case, the stock rejected the high a day second attempt, and then it broke down. So here are two really good examples of the cup and handle pattern. Again, the reason the first one worked out so well was because it lined up on so many time frames: 1 minute, 5 minute, 30 minute, hourly, daily. All eyes were on this setup, and that creates a very powerful move. This setup here on the 5 minute chart, probably more or less intraday traders, day traders like ourselves are watching this one, and although granted it was a good move, not quite as powerful as the last one. What you're going to notice is the more that you watch this pattern, the more that you identify it, the more you recognize it and trade it, the more you're just going to see it all over the place on any bullish type of chart. Even if you just go to a 1 minute chart, you're going to see these little cup and handle patterns all over the place. Look, here's another one right here. And I want you just to get used to seeing these patterns and playing them on a daily basis. So here's another one. See how it kind of had a peak right here, top. We found a base at 890. Here's a mini cup and handle on the 1 minute chart right here. There's the higher low. There's the trigger to enter. and there's the breakout, okay? Now, just keep in mind, as most of you guys know, I don't trade breakout patterns after 12, between 12 and basically 1:30. That's the lunchtime period. So what I'm typically doing between 12 and 1:30 is I'm just looking for any bullish stocks to form a nice range and give us a cup and handle setup or a breakout pattern into the close, so after 1:30 p.m. Guys, this has been our video lesson on the cup and handle pattern. If you have any questions on this pattern, feel free to email me, jeff@livestreamtrading.com, or private message me in our chat room anytime. Thanks, guys. See you next time.